Good deals get funded. If you have a good deal, chances are you'll get the money that you need. I'm telling you because I've funded a lot of people that had good deals and wanted my lenders and investors to fund them. So I've been in the funding industry for about 5+ years, and I know the difference between a deal and a dud. On the funding side, where the people who are actually writing the checks congregate and talk about the difference between duds and deals, they don't spend much time on duds. They can quickly assess within a matter of a couple of minutes whether or not it's worth pursuing. And these multi-million, or in some cases multi-billionaires, who are actually writing the checks, they try to optimize their time and spend less of their resources on the bad leads. So you could be one that is a real estate investor or a person that needs funding for business or even for personal reasons. When you bring your lead to a investor or lender, what you want to do is make sure that you hit certain marks, because the last thing that you want to do is have your lead end up in what I call a slush pile. And a slush pile, in the context of, I guess you can say, publishing, where when people send unsolicited manuscripts to publishers, the publishers don't typically look at them. They just put them in a pile and they say, later on I'll get to them. And in that pile you may have hundreds of other files or hundreds of other manuscripts or book proposals that were sent unsolicited that never ever get looked at. In the same way, when you send bad leads to investors or lenders, chances are they're ending up in the slush pile, or not even being answered at all, not even being looked at as far as the email is concerned, or the letter, whatever. I don't want to say letter, but however you contact them, if things don't line up and you don't catch them from the start, from the jump, and you don't really intrigue them at the gate, chances are your file or your project, your lead, in your mind you may think it to be a deal, but it may not be a deal yet, but your lead doesn't even get considered. So my job today is to show you how to go about turning that dud into a deal. One of the main things, as far as having a deal, and you should know this part, this is pretty easy. I mean, for anyone that is out there doing any type of investing or anything like that, you want to make sure it's profitable. Not just for you, obviously, but you want to make sure that the investor is actually getting a return on their money, or the lender, the investor or lender, kind of interchangeably. I use those terms, but you want to make sure they're getting a return on their money. What does that return look like? Is it a certain return on investment, or IRR, the internal rate of return? What is it? Is it 12%, 18%? And how can you guarantee that they'll get that? Is there a industry, I guess, norm? Is that like an industry norm? Can you show other projects that have gotten that? Have you ever done projects that have gotten that before? So whether it's for business or for real estate investing or for like personal reasons where you need the money, you should make sure that you can show that they'll get a return on their money. That's the first part of it. And we're just talking about the basic things required to get you past the hello, get you past that slush pile, get you past, okay, I have a new lead. You want to actually get the lender or the investor to take time to look at it and go through it and really thoroughly consider it. So you want to make sure that you have that return on investment. It has to make sense. You have to actually do what we say a pro forma of what that looks like, and that's like a 3 to 5 year financial analysis or financial breakdown of what type of money you plan to make from your project. So have it laid out and make it clear and concise and credible, so that the investor or lender can look at it and say, okay, this makes sense. I can see how I'm getting a return on my money. So that's one of the first things. The second thing is that you should have something on the back end to kind of like protect the investor or lender. How are they protected? Do you have any collateral? Are they getting first position on the property? Do you have any other assets that you may be pledging? Do you have any cash of your own? And I'll get on that in a second here, but you should have different ways of protecting the investor just in case your project goes belly up. How are they going to, get their money? How are they going to sell something, or what are they going to sell to get their money, to recoup their money in case your project fails? So you should have some form of collateral, and you should make sure that the investor feels safe, because the one thing that they never ever want to do, even if they don't technically make money, they want to make sure they don't lose money. So you have to make sure that you are protecting their butts, and you do that by way of kind of bringing assets to the table, but also looking at their money as kind of like your own. You don't want to just risk your money. You don't just want to lose your money. So you have to kind of like protect their wealth. We call that protecting the shareholders, or protecting the investors' wealth. Look at it as though you're trying to preserve it with all your life, so that they don't lose money. Okay, so that's another thing. The third thing that I would say is what people often skimp on. And when you need someone's money, you should actually show that you have some skin in the game. Not just in terms of what you already invested, although that could be a good thing. You should also be able to bring some cash to the table. And depending on your experience, that cash to the table can go upwards of them wanting 30% down, 40% down, in some cases higher. Or it can be lower depending on your experience. If you have other projects you've done, and I'll touch on this in a second here, but if you have other projects you've done, less money down may be required. It could possibly be a situation where you may have to just put 10% down, or even less. You may just have to cover certain fees and put far less than 10% down, depending on the project and the investor. But you should have a decent amount of money down. And when I say decent, I mean even if you don't necessarily have to put it all down, you should be able to come to the table with at least 15 to 25% of what you're asking for from the investor. In liquid cash, you have it readily available in the bank. You can prove that it's in the bank, showing a proof of funds through your bank statements and what have you. It's ready. And this is how you get taken serious in the industry. When you don't have your stuff together, you'll just look like a person that's kicking tires, and your name will get out there pretty quickly, and it'll probably be in a bad way. You don't want to be out in these Facebook communities and all these online groups and whatnot, being the person that never has the ability to close on a deal that they presented to an investor. You want to come correct if you come at all. So make sure that you have your liquidity right, and it can be as low as 10% down. It can be as high as 40% down, depending on the deal, or depending on the lead. It can be a real estate lead or a business lead, and your experience, as well as in some cases other factors, could dictate how much money is required for you to put down. Even investors, people think that you can just go to a investor, like an equity investor, who's doing like a private placement. You're doing a private placement, and you think that you can go to an equity investor, and they automatically give you 100% of whatever you're looking for in terms of the funding, or 100% of that amount from them. That's not even true, to be honest with you. I mean, in my experience, that's not even a reality, because even the investors that are equity investors that I've gone to personally, and we've asked them, okay, is there ever a situation where someone can come with no money down? You want to know what their response was? Their response was, quote, "If they don't believe in their project, why would I?" Absolutely, they need money down. That's from an equity investor, someone that takes a chunk out of the project. That's how they invest, but they still want the individual to be able to show money down. And that amount, again, depends on the project, it depends on the investor, it depends on the industry, it depends on your experience and other factors. But if you want a project to seriously be considered, you should have your money available to put in the project just in case, because again, it depends on the investor how much they may want you to bring to the table. So we talked about those things. What about credit? Well, you should have a pretty decent credit score, and decent depends on, again, the investor, the project, your experience, and other factors. Those things could really determine how much credit you need, your credit score that you need to get approved for funding. Some people don't look at credit. They look at experience, or they look at just the return on investment. They look at, different factors, but most lenders will look at credit on some level, and some investors may even look at credit. But what I would say is that you should have at least, to be honest, I would say at least a 650 credit. In some cases, as low as 600. But again, the lower your credit, the more money may be required to have down, or the greater security that the investor or lender is likely to want, because they want to make sure that you're a responsible person and they're not just throwing money away. So have your credit score in a decent place. If you don't have good credit, maybe find a cosigner who has a decent credit of at least 600, 650 plus. The greater the credit, the better terms you can get as far as the interest rate and possibly the money down, the LTV, and things like that. So your credit should be there. Another factor that is likely to be considered by the investor or lender. Another factor that people tend to skimp on when they go to lenders or investors for money. And when I say money, it can be as low as $100,000 upwards of hundreds of millions of dollars or more. These are factors that you should go to the lender or to the investor with every single time to look professional, to make sure that you're taken seriously, and to make sure that you give yourself a little bit of negotiating power. You want to make sure that you at least come correct, because that way you give yourself a little bit of power to talk about terms or to discuss interest rates. If you have experience and you have a decent credit score, and you have other projects under your belt, that may be a way to show the investor that you're worth the better terms, because you have other options available, right? Let's talk about experience. How many similar projects have you done? If you're doing a project, and if you're doing like a personal loan or something like that, that may be a little bit different. But if you have a project, or you're asking for business funding, how many projects have you done in the past, say 5 years, 3 to 5 years? How many similar projects? Are they in the same income range as far as the amount that you're asking for? If you ask for $5 million this time, have you had any other projects in the past 3 to 5 years where you actually were financially responsible for the project, being like the PG or the personal guarantor, where you'd be on the hook if everything went haywire? How many projects in the past 3 to 5 years have you done? Have you done any other $5 million projects? If you have done none, and this is your first one, then that may determine whether or not you get approved. And if you do get approved, it may require more money down or less favorable terms, like a higher interest rate and things like that. You see, so experience is key. If you don't have the experience, you should be able to bring someone to the table, a sponsor or someone that can actually show experience where you may lack experience in that particular endeavor, be it multifamily investments or fix and flips or hotels or whatever you're doing. Even if it's like an oil business or something like that you're looking for funding for, if you don't have the experience, you should be able to bring partners to the table that can show experience. They can be people who've done similar projects before, or they can probably even be a part of your team, to some team members. If you can show collective experience of having done projects like that, then chances are the funder feels a lot more confident in investing in what it is that you have to offer. Another thing along those lines is, what about industry knowledge? Do you know about the industry? What does the trends say? What do the trends say? What happened in the past 5 years? Is this a new and emerging market? Or how long has it been around? Is it a risky area? I mean, are you in a location that is risky? Is it like in another country that is affected by the local government fluctuations? Is it a place where the economy is unstable? You know what I mean? So you should know the market, and in addition to knowing your market, you should know your customer, know your ideal client. Who are you serving? What are their demographics or psychographics or geographics? Where are they located? Things like that. You should know that, and it should be clearly spelled out for the investor in case they want to delve deeper into your lead. And by the way, just an FYI, those long pitch decks that you might put together, they don't get looked at initially. They don't always get looked at initially until you pique their interest just like that from the gate. So do the long pitch decks, sure, but I think you should have something before the long pitch deck to see if it's even worth the investor's time, and give them that privilege of being able to decide if it's worth them reading the details of your pitch deck. And what I mean by that is that you probably need a teaser. You probably need a one-pager of what it is you're asking for in terms of the money. What are you going to do with it? What is your background? Where's the project located? And stuff like that. That gives the funder the opportunity to decide within 2 minutes whether or not it's worth them reading your entire pitch deck. So have the pitch deck available if your project warrants it, but give them something a lot simpler to read to decide whether or not they want to move forward. Okay? Now, with that said, you should also, in terms of your pitch deck or your project summary or executive summary or whatever you may be presenting in more detail to the investor, you should have all the key elements of what it needs to have. I'm not going to get into that. We actually have a service where we're able to help you put your pitch deck together to the requirements, the criteria of investors, because they have a certain criteria for what should be included in a pitch deck or project summary. And if certain things aren't there, chances are they don't look at it or they get turned off immediately, especially if you're coming on asking for $100 million and you don't have a professionally put together pitch deck project summary with the pictures, with the team bios, with the market information, with the pro formas, with all the financials that you need and things like that. So there are certain elements that you need to have in a professional pitch deck / project summary, executive summary, that will get the attention and retain the attention of an interested investor. Because what you want to do is cause them to skip from your teaser, or actually read your teaser or your one pager, and then decide, hey, I like this. Let me look deeper into it because this could be a great investment. I want to look at the details of the project, which may answer questions that I have. So you want them to go from the teaser to the full pitch deck. Most investors or funders, if you sent them just the pitch deck, these are finance-oriented people. They get straight past all the BS and they go straight to the numbers initially. Most of them. They're gonna, like, it's important you write about your bio, you write about the industry, you write about what you need the money for, the uses of funds and all that stuff. But most of them, if they're operating efficiently, are more than likely going to skim all that stuff to get a real quick overview of your project. And I mean like in a matter of a minute or so. They'll skim through all the generalities of your project and they'll go quickly to the financial sections of, okay, how much money do they need? How much, what's the return on investment? How much of their own money have they already put in? How much cash do they have available? Stuff like that. They skip to the finances because ultimately these are finance guys that are talking about giving you finances, and they want to make sure the finances on your end are in place for them to even invest, and they can do that very quickly. They don't want to spend 2 hours reading through your 50-page pitch deck to find out, oh, I'm not going to fund this because this person has an unreasonable return on investment for us, or they don't have any skin in the game on their part, or things like that. They want to quickly decide whether or not it's even worth them reading the full 50-page or 200-page pitch deck, which most will not read 200 pages anyway, right? But you should have stuff like that quickly attainable for them, like maybe even on the teaser page. Maybe this is how much money we've put in already. This is how much money we have available that we can show proof of funds. This is what the market says. These are how many, pending contracts or whatever we have. Stuff like that would get them to read the entire thing. You see, so that's another element of it. And there are other things that they would look at to determine, they being the funders, determine whether or not you're a person that they want to remove from their slush pile, or a person that they want to spend more time on evaluating your project in the first stage of evaluation, because there are multiple stages of evaluation occurring during the process of funding. So, you have underwriting and everything else. So that's the first stage, as far as them evaluating the project. They'll go over all those things to see if it's worth them even doing a phone call. They don't just hop on the phone with anybody. I love when people come and say, oh, let me do a 30-minute phone call with the investor. They don't really want to talk to people unless they have a qualified lead. And they can quickly determine which leads are unqualified because they are masters at money, and time is money. So if they can quickly disqualify a lead, that saves them money, it saves them time, and they can go on to a qualified lead. You see what I mean? So you have to have certain things in place, and I just touched the tip of the iceberg, so to speak, concerning this, because there are a lot of other things that they look at. They look at your personality, your character, your business setup, your social media. Do you look professional? Do you conduct yourself as a professional? I mean, they'll probably do some research on the legitimacy of you as a person. Do you have any fraud alerts or anything like that? They're really going to look into you, but it's done in segments. It's done in segments because these lenders, investors are masters at lending out money, investing, and getting a return on money, but also masters of their time. They don't waste time. They know quickly whether something is a deal or a dud. So if you want to go correctly to a funder, think about those steps that I just mentioned. There are other things as well. I mean, I only touched the tip of the iceberg. They want to look at your team synergy. They want to look at a lot of different things. Are you a person that is open to constructive criticism, or are you a combative type of personality? If you're combative, you may jeopardize the deal. You may jeopardize it because they may not want to work with you, even if on paper it looks like a good return. So those are basic things. If you have a question about whether or not you have a dud or a deal, or you like to be considered for funding for personal reasons, or business, or real estate, or anything else, feel free to reach out to me. My name is David Newby. I am a funding consultant here in Maryland. My email is finance@revive-movement.com. finance@revive-movement.com. Shoot me an email. Let me know more about your project, and I'll see how I'll be able to help you. And if not being able to help you immediately, maybe it's not up to par with what our investors are looking for, I can at least give you some constructive feedback, is what I like to call it, about how to get it to where you need it to be to cross that bridge of success with our investors. So you can reach out to me, finance@revive-movement.com. Send me information about your project. It will be great to have an executive summary. If you don't have an executive summary, at least a one-pager about how much money you need, what you need it for, how soon you need it, what's your location, what's your background experience, and things like that. Just basic stuff that you would want me to know and ultimately share with my funders to get you the funding. All right, so with that said, if you know anyone that needs funding for business, real estate, or personal reasons, reach out to me, let me know, and let's discuss their project, and maybe we can set up a commission structure where we're able to give you a percentage of the funding that we get when the deal closes, because we get paid commission on the back end, in some cases equity in the project. But if you bring a lead and that lead gets funded from one of our investors or lenders, then we will pay you a commission split in terms of what we get. Okay, we do everything from real estate to business. We do entertainment projects. We do basically technology, movies. We do transportation, infrastructure, you name it, e-commerce. So many different fields that we're able to get people funding in. But again, think about those factors that I mentioned, and then when you have something that's ready to be presented, then let us know and we can see how we can help you. And by the way, if you don't happen to have certain things in place, maybe your cash is low and you don't have enough liquidity to bring to the table, if you have a decent credit score of like 700 plus, or you have a decent annual income, we can probably leverage those two things. And I say decent income of at least $50K per year. We can probably leverage those two things to get you up to $400K in unsecured funding if you have certain assets. stocks, bonds, 401ks, IRAs, investment properties, things like that we can actually leverage. We can use that to get you some money as well. Even if you have like a shot credit score or something like that, if you have assets, we can work with that too. Okay, so reach out to us, finance@revive-movement.com. We're going to do what we can do to help you get money, because that's why we're in business, to be the bridge between money and the people who need it. Okay, this is David Newby. If you want to find out more about me, you can find out more about me at my links, which is linktr.ee/DNVM22. linktr.ee/DNVM22. All right. I'm the founder of the Revive Movement to revive the nations, and I revive the nations in one way, by way of getting people funding for business. I do it in a number of other ways as well: spiritual coaching, business coaching, personal development coaching. I put out a lot of communities for empowerment and things like that. I'm all about reviving the nations and getting our spirits to a new place and getting us collectively building our countries up. So that's what the Revive Movement is all about. And glad to come to you today, hoping to help you get funding for your business or real estate or personal reasons. And if you know anyone, feel free to reach out, finance@revive-movement.com, and we can talk about their project as well. This is David, founder of Revive. You have a great day. Talk to you soon.